Hi, everyone. Paige Panzarello here, the Cash Flow Chick. And I wanted to share this with you. I was talking with a mentor student of mine. We were having our biweekly chat, and um, I was talking with her about real estate and notes, and how at some point, even with notes, and for me, I feel that notes, if you're going to be investing, especially in real estate, that becoming the bank is probably, obviously it's not risk-free, nothing is, but it's probably one of your safer types of investments that you can make, in my opinion. Now, we were talking about that, and even though I consider it to be one of the safest investments out there, there's still always the possibility of losing money. And so my mentor student and I were talking about this on a Zoom call, and literally she had a physical reaction that I could see when I said, even you at some point, you're going to lose some money. And there was a physical, literal physical reaction to that. And I want you to know, nobody likes to lose money. And a lot of people, that fear of losing money really prevents them from even trying. And so we were able to talk through it. And I'll tell you that even though there was that physical reaction, and literally her shoulders tensed up, her head went back, I could see in her body language that reaction. And most of us have that, right? Um, just understand that at some point it is going to happen. And if you embrace that, hopefully you are not just going into whatever the next shiny object is, right? Hopefully you are doing your due diligence about who you are as an investor, whether that's notes or fixing and flipping, or syndications for commercial real estate, whatever that type of investing is. Hopefully you've done your due diligence and you have figured out not only who you are as an investor, but the things that you're looking for to get out of it. Okay. But that being said, even the best due diligence, those of us that really crack down, myself, and I'm probably at the top of the list, right? In terms of cracking down on doing my due diligence before I buy any notes or invest in any notes. Um, uh, there are times that little things happen that may cause you to lose money. And the sooner, hopefully, if you've done your due diligence well, it's just a small oops, right? And I always build in contingency, right? I expect that there's going to have to be some funds set aside for the what if of it all. And you should do that as well. No matter what type of investing you're doing, there should always be a surplus fund or a contingency fund, right? That allows for that little oops just in case. But if you educate yourself and you've done your due diligence well, very likely you're going to be able to offset or minimize that loss. And it does happen to all of us, everybody. It does happen to all of us. It's only a failure or a loss, really. I mean, well, it's a loss of funds, but it's only a failure if you don't learn from it, right? So I just want to encourage you, don't let that fear stifle you. It's really preventing you from a lot of opportunity. There's no reason to become so stressed that there's a physical reaction to it, because, unless you do things like me, and any of you who know my story know that my loss was huge. And I'm not minimizing that in any way, shape, or form. But obviously you can come back, right? If you did it once, you can do it again, but you have to learn how to breathe through it. And you have to go into any investment knowing that at some point, very likely, there is going to be some sort of loss. And of course, my wish and my prayer for you is that it's very minimal. And the way that you make that loss minimal are three things: education, due diligence, very diligent due diligence, and being willing to pivot. And what I mean by that is, A lot of us will go into an investment thinking that we have a specific exit in mind. We want the investment to go a specific way. And sometimes that doesn't always happen. So sometimes we have to be willing to pivot and change direction and be willing to give it a little more time so that we can hedge against any of that loss, right? So those are the three things that can prevent it. But I did want to share with you that most of us don't even realize that we do have a physical reaction, right? Our shoulders hunch up and we get very tight and a frown across our face because none of us want to experience that ever. But it can help you to grow. And hopefully, between education, due diligence, and the willingness to pivot, you can hedge against any kind of loss, or at least most of it. All right, everybody, just wanted to share that with you. If that's you, and you want to talk about it, I'd love to chat with you. Go ahead and go to cashflowchick.com. You can book an appointment with me right on my calendar at a time that's convenient for you. If you're interested in education about notes and what I do and investing, becoming someone's bank and helping them to stay in their homes, I would love to hear from you. You can go again to cashflowchick.com, or if you're really interested, you can go to buildingwealthwithnotes.com and sign up for the next workshop that will be coming soon. All right, everybody, talk to you soon. See you next time. Bye.